Hello and welcome to Lunch and Learn Get Pre-Qualified. We are just so thankful that you have decided to take a little bit of your lunch break to join us and several members of our expert mortgage lending team. And they are all here ready to empower you with what you need to know about getting pre-qualified for a home loan and help you make your next move with confidence. So before we get started here, I just want to thank you for tuning in and taking time to be here. We'd love for you to use the chat section wherever you're joining us, whether it's on Facebook or YouTube or LinkedIn. Let us know who you are, where you're joining us from. Use that chat section. We'll be checking that throughout this entire Lunch and Learn. And we, like I said, are super excited that you're here. Before we get started, I'd love for us to take a second to introduce our team, our expert mortgage lending team here. And Cheryl, why don't you start us off?
Sure. Hi, everyone. Glad you joined us. My name is Cheryl Nolan, and I'm located at the William Street branch in Cape Girardeau, Missouri.
Hi, I'm Kristen Hensley here, a mortgage loan officer in our Bolivar, Missouri Mortgage Center, which is right next to our main location downtown.
Hi, I'm Rachel Eldridge, and I'm the mortgage loan officer in our Mexico location.
Hi, I'm Shannon Meester, and I am located in Perryville.
I am Sheldon Toller, also located in our Bolivar, Missouri Mortgage Center.
And I think I'm bringing up the rear. I'm Christy Frazier Moore, and I am a mortgage loan officer. And these are my team members that I love and am blessed with. And I am out of Poplar Bluff, Missouri.
Perfect. Again, I just want to say thanks for tuning in. It looks like we've got folks from Kennett, from Cape, from Benton, all over. So we are just so glad that you're taking the time to spend a part of your lunch period with us. So without further ado, Cheryl, will you get us started on all things pre-qualification and just what does that mean?
Okay, let's talk pre-qualification. So, a pre-qualification gives you an estimate of just how much you can qualify to borrow on a mortgage. And it also will narrow down your home search so that you can focus on homes that are actually in your price range. Here at the Bank of Missouri, we want to make it easy and painless for you to get pre-qualified. So there are several options for you to get online. For those of you who are tech savvy, unlike me, if you are tech savvy, you can go online to our Bank of Missouri website, choose your favorite lender, and complete the application online. Also, if you're not so tech savvy, we'd be happy to take your application over the phone. And thirdly, my favorite is to meet in person. So if you could meet at one of our convenient locations, we'd be happy to take your pre-qualification application in person. Once we have the application, pull in the credit, if you're pre-approved, then we can actually issue you a pre-qualification letter. This can give you an advantage over someone who's not been pre-qualified as far as making a bid or on your new home. You can take this pre-qualification letter. It's a great tool for you to give to your realtor so that they know what price range you're pre-qualified for. So you're not wasting your time or their time as far as looking at houses that actually aren't in your price range. So now I'm going to turn it over to Kristen, and she's going to share more information about
As Cheryl said before, there's several options in order to get pre-qualified. It's quick, easy, and free. All we have to do is fill out an application. You can do it online or we can do it together over the phone. We will need your basic information such as your full name, date of birth, security number in order to pull in your credit. We will also need a complete 2-year work history and a 2-year address history. Together, we will figure out your monthly income along with your debts that come through on that credit report and figure out what you're able to afford. A pre-qualification is only as good as the information provided, so we really want to make sure to be as accurate as possible. That way, we're able to give you a very confident picture of your ability to repay, and you're ready to make an offer on a house. Rachel is going to talk to you about the several different loan options we have.
It appears we are having just a few technical issues, and we are going to actually let Christy Fraser Moore take over and let us talk about what all that means. Christy, let me get you up here.
Yes. So Rachel was going to talk about how loan options can fit your unique needs. And pre-qualification is wonderful in helping us getting to know you and what your goals are. When you come into the bank, we want to help you achieve your goal the best way for you. Everyone has a different budget category, different savings, and things like that. And we can take an outlook on your full financial picture and see which loan program works best for you. We have conventional mortgages, VA, FHA, USDA, and they all have different down payment options and program structures. And when we get to know you and field your whole financial perspective, we can help put you into the right product that meets your goals and your budget. And I believe Sheldon.
There we go. Okay. So pre-qualification is very important, and we definitely want to figure out how much you can qualify for. But we also want to talk about budgeting. And one thing the Bank of Missouri is very passionate about is financial education. Not only do we want to tell you what you can qualify for as far as regulations with debt to income and those kind of things, we want to review your budget with you and figure out what is going to be a comfortable payment for you that allows you to also achieve other goals you may have. Many people are saving for maybe a down payment on a car, a vacation, retirement. There's a lot of other goals. So we want to fit that home payment into that entire budget. Our website has some really good resources. If you go to our website, there's a tab that says Learn to Budget. If that's something you've never clicked on before, I would really encourage you to do that. It has some information about percentages that are good to use. Our website references a 50-20-30 rule, which is 50% of your income going to necessities. And this would also include the housing payment as well as things like your groceries and electric bill, things like that. 20% would go to savings, which would include your retirement savings as well as some other goals you may have. And then 30% goes toward wants. Of course, we all like to have fun and take trips and buy things, so we want to include that. That's just one rule of thumb. Of course, we know that everyone is different. Everyone has a different budget, but this is a place to start. It also has a place that you can create a budget on our website. And I've looked at this. It is a really useful tool if you're just looking for something to do that. So we'll sit down with you and really give you as much information as you want. If you just want to sit down and talk about general numbers, we're happy to do that. If you would like to have a more comprehensive budget, our people would love to do that also and put that on paper. At the end of the day, we want you to make a well-informed decision. And after you buy this home, we want you to have no regrets, to truly love the home that you're in. And I think that doing a budget will allow you to do this. So that is what I have on budgeting. Shannon, I'm going to send this back to you now.
Yeah. Thank you, Sheldon. Those are some great points. So, one of the many benefits of pre-qualification is it gives you time to pay down some extra debt that you may have or clean up some credit issues. Because when we do that, when Sheldon talked about your budget, we're looking at what we call your debt to income ratio. We shorten that as DTI often if you hear us saying that bank jargon. But the debt to income ratio is a large factor of your approval amount. We use this ratio as a percentage to determine how well you can manage your monthly debts and see if you can afford to repay a loan. So some of the payments that we include in this ratio are one, your new monthly mortgage payment, including your full principal, interest, homeowners insurance, and property taxes. We look at the minimum payments on your credit cards, if you have any auto payments, student loan payments, or personal loan payments, and if you are obligated to pay any alimony or child support, and then any other debt payments that would show on your credit report. So we take these payments and we divide that by your gross monthly income. So you may be thinking now, like, hey, I have other bills besides what you just mentioned, other financial obligations like utilities, groceries, healthcare, daycare. But that's why we don't max out your gross income. That's why we have these debt to income ratio caps so that you have the ability to pay those other payments. And if you have extras of those, you may want to be conscious of that. And that's where that budget tool comes in that Sheldon was just talking about on our website. And so part of that question might be, what ratio am I shooting for? 45% is a nice average max. However, depending on the loan program that you're applying for and your credit score, how much you're putting down, what you have in savings, there's a chance you could actually qualify for more. But some programs, in fact, require lower. So it's definitely just a good conversation to have. So when we're looking at that and you're talking to your loan officer and we've given you a pre-qualification amount, you may decide, hey, I want to afford more of the house than that. And that's when it's a good time to step back and look at those budget calculators, and we can help you with that, track your spending and see, maybe I can pay off some of these other debts and then I can in fact qualify for more. So it's a great opportunity to just review what you got going on.
Thank you, Shannon. I appreciate you going into that, and all of our mortgage loan officers for just taking the opportunity to discuss some of those things that you need to think about when you are getting pre-qualified. So we've got Christy Fraser Moore here to talk a little bit more and go in even more in depth about getting pre-qualified.
Yes. So as you can tell, this is something our team loves to talk about. We love pre-qualifying our customers because it just gives such an empowerment for them to be able to go out and buy and make an offer on that home that they're wanting, their dream home. And we're blessed and lucky to be a part of that. And we love what we do. And I think that has shown through our team's answers at this point in time so far. And one thing I want to touch base on is that budget. I think Sheldon talked about it. Shannon spoke about it. And budget, it's one of those things that sounds scary, but man, if you can work on a budget and it doesn't control you, you control the budget. And that's what we're here to help you do. So we have a few questions that we have received over the past couple weeks as we've been working on this. So I'm going to throw some out to our team now. So I'm going to start with Kristen. I've got a question for you. How long does it take to get pre-qualified?
We can get you pre-qualified as soon as we have all the necessary information on the application. Typically, that's within the same day.
Anything in particular that would be helpful for someone to know as they make an appointment or come in to see you about that pre-qualification?
I would definitely be prepared to go through an application and answer all the questions. So the one that I see the most is people remembering their 2-year job history and that address history, going through and being able to have all that information ready and on hand makes it a whole lot easier. If you come in with your tax returns and income documents, that's a plus, but it's not absolutely necessary.
Good. Yes. The more information we have, the more solid our answer can be to our customers. So we want to make sure that we're dotting our I's and crossing those T's. Okay, great. Thank you, Kristen. Shannon, I think I have a great question for you. So let's say Christy Fraser Moore has been pre-qualified, and I don't want to do anything that's going to impact my credit history or jeopardize my pre-qualification. Is there anything I should be aware of?
Yes, actually, there's several things. But the four biggest players that could impact your pre-qualification approval are number one, taking on new liabilities. So let's say you want to go out and purchase a car. This is going to add a new payment to your credit, and then that's going to affect your debt to income ratio that we just talked about previously. And that industry standard of where we want to be kind of around that 45%. Number two, changing jobs. Since when you change jobs, your income is going to change. This is going to affect your gross monthly income. So it's going to change your debt to income ratio as well. Keep in mind, we're also looking at job history and stability, and the industry standard is 2 years in the same or similar line of work. Number three, not paying bills on time. So, in order to maintain good credit history, bills need to be paid on time so that they can reflect positively on your credit report. If you look at your credit report factors in a pie chart, making timely payments is one of the largest pieces. And just because we pull your credit at pre-qualification, we will do another soft pull later. So we will know if you're not paying your bills on time. And then the fourth thing is maxing out your credit cards. And again, this goes back to debt to income ratio. The higher the monthly payment, the higher your debt to income ratio could be. So increasing your balances raises your monthly payment on credit cards. So we don't recommend charging to credit cards during the loan process. And we also recommend keeping your credit card balances below 30% of your maximum approved amount on your credit card limit.
Wow. That's a lot of information, but all very, very good information. Some takeaways that I really heard about that: new liabilities. So let's say we know that we're going to get closer to finding a house and we want new furniture. So Shannon, let's say I call you and ask you this question: how would you handle me as a customer saying, "Hey, I'm pre-qualified, but I'm going to go buy some furniture"?
So a little bit of a lag there. So I think you said if someone called me and wanted to make a purchase, how would I handle that? So it's really going to depend on where you're at in your situation. My first recommendation is don't do it. Wait to purchase your furniture until we're finished purchasing your home. There are certain situations that it may work, but it's not worth the risk because you could kill your entire deal and you might lose buying out on that house.
Good information. Thank you for that. And many people, when we receive applications and we pull credit bureaus, we pull all three credit bureaus. So when we do that, we take the middle of the three scores, and that's what we use as our indicator for your loan program, potentially. And one thing that I have seen a lot, as I'm sure you guys have too, is if we receive an application, pull credit, and someone has been late on their car payment. Well, that late payment, if you've been 30 days or more, can report and will stay on your credit report for 7 years. That's a long time for one small little mistake, and it could have been a complete honest mistake, or maybe you were having a little bit of financial difficulties making that payment. Either way, it stays on there for 7 years. So that timely payment is super important with your credit report. So Cheryl, I'm going to.
Well, there is a minimum credit score. So if you're talking about doing a government loan, say FHA, rural development, then your credit score could not be less than 600. On conventional loans, it does need to be a little bit higher than that. If you do not have a 20% down payment, we're not able to get the mortgage insurance if you do not have a 600 credit score. So we really need to concentrate on paying your bills on time and getting that credit score built up so that you have lots of options.
Right. So as I think Rachel and Shannon was talking about before, we offer many loan types, and each of those loan types has a different guideline, if you will, including credit score. So it really depends on your situation And that's something that your mortgage loan officer will really talk to you about, hopefully before even applying for that pre-qualification, to get to know you and your situation a little bit better. So let's talk about something fun. As it's lunchtime here, the word cookie comes to mind, and we've got a question here: can I use cash in my cookie jar as a down payment? So Cheryl, would you jump in and answer that one for us as well?
Sure, I'd be happy to. So we do get this a lot. Many people have cash stashed around the house in a cookie jar, under a mattress, wherever. And they want to use that cash for their down payment, closing costs, prepaid items. So the home loan process is all about documentation. So we have got to document where your funds are coming from for your down payment and your closing costs. So we're going to ask you for 2 months of bank statements. And if there are any large deposits in that bank statement other than your normal payroll deposits, then we're going to need to know where those funds have come from. So we are going to have to document any type of large deposits that go into your account. For example, if you would sell a side by side and you made a $10,000 deposit into your checking or savings account, then we would need to verify via bill of sale that that's actually where those funds came from, which is totally fine as long as we can verify that. So back to you, Christy.
Thank you. So I think what a key word I heard there was verify. In our world, mortgages, we need to document and verify pretty much everything that we have in your loan file. So that's where that's super important for not being able to use cookie jar money or mattress money, or if you have a can buried in your backyard. We've heard it all on our side. So those funds have to be verified. Thank you, Cheryl. Okay, Sheldon, one of our seasoned MLOs, as are the rest of our team. I've got a doozy for you here. So let's say that my credit score is not the best. Can I still get a home loan?
So as we talked about a minute ago, credit scores are important. However, I would say what comprises the credit bureau is the most important thing. So when you think about your credit bureau, you can ask yourself a few questions. Have you been making payments on time, or have you been 30 days late recently? Have you had any foreclosures, bankruptcies, collections, judgments? Are credit card balances over that 30 to 50% of your credit limit? Those are all things you can think about and get a good idea maybe of where your credit score is. Now, as we talked about, we also have a lot of loan products. So the thing I encourage everyone to do is to just apply. That's the first step. What we can do is we can pull credit. We can take a review of that credit together. I like to sit down with the person either on the phone or in the office if they're available for that. Print the credit bureau off with them and go through it and just see what things need to be maybe repaired a little bit in order to get to a point of purchasing a home. I never want to tell someone, sorry, we can't do a home loan and leave it at that. I really want to give them some steps they can take to become qualified in the future if they don't qualify right now. Sometimes those things aren't as hard as what you may think. It may be a matter of just paying off a few small collections and waiting a little bit, or paying a credit card balance down, waiting a little bit, and before you know it, you're able to buy a home. The other thing I would mention is there are some things we call compensating factors that can help out if your credit score is lower. Some other questions you can ask yourself, how much down payment do you have available? If you have 20% down versus having no down payment, that's going to open up some options. Is your debt to income low? If you don't have very much debt compared to your total income, that can help out. A third thing are called reserves. As you think about your bank account, how many months can you pay your bills before you run out of money in those accounts? Those are things that lenders look at that show strength, and even though a credit score is lower, you may still be able to obtain a home loan. But I think the key takeaway is don't let the fear of having a low credit score keep you out of our office or calling us or applying, because truly that is the first step to really take an assessment and figure out where you're at.
That's great advice, Sheldon. I agree. Communication and just, tackling it. Go ahead and have those conversations and see how you can get in there and maybe repair some of that credit and take the steps to get you in the right direction to get you into that home loan. So thank you. So we have another question, and I was going to pass this one off to Rachel, but we're having a little bit of technical difficulty on Rachel's in there. So I think I'm going to pass this to Shannon instead. So Shannon, can you tell us how long the pre-qualification is good for?
Yes, that's actually a great question. So, prequals are good for a minimum of 90 days. However, it does actually depend on which loan program you are applying for. So, certain programs have different timeframes. For most government loans, USDA, Rural Development, FHA, those type of things, the credit's usually only good for 90 days. However, we do have some local in-house Bank of Missouri products that are actually good for 180 days. So, of course, one thing to keep in mind is our market is changing drastically. So every couple of weeks, if you're not checking in with your loan officer, you need to be. Every 2 weeks, I would say, because if rates are changing, your pre-qualification amount could actually change. So yes, although your credit could be good for 90 days, keep in mind that you need to check in with your loan officer every 2 weeks.
It comes back to communication, just like with every other relationship, right? It's all about talking to one another. Good. Thank you, Shannon. So I think we have time for one more question. And this one is probably the one who, in this day and time, we get asked this a lot. And it's kind of a tricky answer as well. So I think I'm going to field it over to Sheldon to talk about. But so we've heard rates are not that great right now. Do you have any advice or any input that you could let us know about regarding?
Yes, I do have some general advice on interest rates. And one thing I would encourage you to do if you're interested in that kind of thing is to go out to the St. Louis Fed website. They have some really good information on historical mortgage rates. And I like to look at it every now and then because it helps keep things in perspective for me, which I think is very important because this question truly is a very relative question. Are interest rates higher than what they were a few months ago? Sure, they are. Are they lower than all-time highs that we see on graphs? They're much lower. I looked at this graph the Fed puts out this morning, actually, just to kind of as a refresher. And in the last 50 years, you can see rates over 18%. You can see rates under 3%. So without getting too specific on current market rates, I can tell you that we're well within an average, in most situations. Interest rates also vary from person to person. Credit scores we've talked about, debt to income, down payments, all these things can help with an interest rate. So that's something to keep in mind. The other thing I would point out is that when you're borrowing money on a house, this is an asset that appreciates in value. Now, of course, we can't guarantee an increase in value in a home, but historically that is what we've seen. And when you're borrowing against an asset like that, generally that's a good thing. I think we need to take into account all the things we've talked about today, budgeting, just your personal situation, why you're buying a home, those kind of things, and determine if, regardless of where interest rates are, is it a wise decision? I've had a lot of discussions about this with people, and buying a home solely based on an interest rate, I would say, is an unwise decision in general. It's really just one aspect of many when you're considering maybe one of the largest purchases you make. So call us, come in, call your local Bank of Missouri lender. It is definitely something we are happy to discuss with you, your individual situation, and just to determine if it's affordable for you. And anyway, yeah, just give us a call. Christy, I think that kind of answers the question.
It sure does. And you did a great job answering it. We hear that question a lot these days. And really, communication's key, like we've talked about, and also your wants, your needs. That's what we're here for, to really help you plan for your future and take care of all that. And I think we're almost out of time, but I just want to say thanks myself to our panel today. As you can see, we have an amazing team that are ready to help you, assist you in any way and they love what they do. They're passionate about taking care of our customers, and they're knowledgeable, and they're part of your communities that you guys live in. So thank you to them. And I'm going to pass it back to Nicole.
Yes, Chrissy, and I just want to echo what you said. Our mortgage lending team is passionate about what they do and really care about walking with you and being a partner that you can count on. And so just real quickly, if you're looking to make your next move, maybe you're in the market to buy a home, well, we're ready to partner with you and help you unlock the home that fits your needs. You can get started with the pre-qualification process by logging onto our website, bankofmissouri.com. That's where you'll be able to start that loan process, find a local lender, whatever that looks like. And of course, all of our lenders are on Facebook, on LinkedIn, wherever you might be, they are too. So reach out to them. I know a lot of them are willing to give you even their personal cell phone numbers so that you can talk to them whenever you have questions. And I hope that we've made it clear during this whole session that truthfully, at the Bank of Missouri, we're here to walk with you through this process. So again, if you're ready to get pre-qualified, get started at bankofmissouri.com. And so, like Christy said, we are nearing the end of our Lunch and Learn Get Pre-Qualified. However, I know that this stirs up a ton of other questions that you might have just about the home loan process, and maybe you're thinking about buying a home or maybe refinancing, something along those lines. Well, we would love to continue this discussion with you offline. So give us a call, whatever that looks like in your world, we're here to help you. Thank you so much for joining us today. And we'll be wrapping up the